Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, October the 15th. The year's 2021. Let's talk trading. It's time for the weekly wrap up. And as always, these videos are for educational purposes only. Your results may differ from mine. As we take a look at the week overall, all the gaps filled, and the pound dollar is 145 pips above the open, 16 pips off the high, and 189 pips off the low. So as you can see, we also broke out of the previous week's high. We're 100 pips above that. So anybody taking that simple horizontal line trade has been paid off nicely. Let's see, let's put this back to the pound. And for some reason, it's taking its sweet time to reset it. I'm not sure why that's happening. There we go. We broke out of the opening range for the week at 36.73. Then we broke out the opening range for the year at 37.31 today. So big moves today. Once again, simple horizontal line trades paying off. And for the year, we're 118 pips above the yearly open. The inside bar on the weekly we broke out yesterday. We're still in that monthly inside bar. Today's range over 100, right now 106, and we've got a bunch. All the pound pairs are over 100, and they're all moving up. Actually, we've had red news 3 days in a row, or red news events. And you can see how the pound responded. The news was bad for the dollar pretty much, and you can see how the markets priced the pair exchange rate accordingly. Right now, this hour, we're pulling back. Buy zone traders were rewarded and hit that pivot. Pivot faders were rewarded, even though that really wasn't much of a reward from the buy zone to the pivot. Only about 4 pips, but 4 pips is 4 pips, especially when you're trading size. The red rats have been feasting a couple of times here, and looks like the last nice little red a turn trade was right there, and then we had another one occur on the M15. Pivot traders said near the pivot point the bias was short. It paid off the first time, but then it has screamed up and hit R2. So R1 or above, bias is short, playing the pullback. Notice we hit the weekly R2. We pulled back once. So once again, we hit the pivot, but look what we did. We took out this missed pivot right here at 37.61. So now we have a missed pivot here, 36.31. So for the month of October, we've got 2 missed pivots on the daily. And let's see, the 40.32 pivot was back in June of this year. Wick zone, in and out of the upper wick zone a couple of times. You can see price came back here and then launched right back out of that upper wick zone. On the range for the week, 205 pips over the for this week. Last week was 126, so you can see we're at the 66th percentile. Nice move this week. For the range, we broke out at a previous high, 115 pips max. We did not break out at a previous low. High minus the close presently at 14 and close minus the low 191. So any of you green rat traders, when I mentioned it a couple of days ago, actually this is on the weekly, but when I mentioned that lower rat zone for the week a couple of days ago, anybody doing the weekly rat zone paid off nicely. So high minus open 161, 75 percentile for the week. Open minus low 44 pips, 41. So once again, trading the weekly open cross in either direction could have been profitable. Just remember, you got to take your pips, because otherwise you're going to have, I guess we should call them, what was it? What did they say? Not wiggle, but whipsaw. Wally whipsaw will come. Will get you. I think that's the new name for those traders that always talk about getting whipsaw. We're going to call them Wally whipsaw. Just like we've got Harry hindsight. And looking here at the wall mall trades, you can see a short would have paid off once, twice, 3 times this hour, but you would have had to only take, somewhere between 4 and 6 pips. So nice moves in either case. And the higher low, lower high box, you can see here 24 minutes ago, we had a higher low right here. There was a short trigger. Then we had a lower high 12 minutes ago, and we had a long trigger, bounced off that long trigger and coming back down. Someone asked in a YouTube reply, they wanted to know why I don't swing trade. Well, I've been at this for a while. Almost 2 decades online. Over 4 decades, back in the old days, when you had to call your trades in or walk into the broker and give the broker your trade. And I've just seen things where you wake up the next day and something happened and your account gets crushed. On the other hand, there's also been a couple times where something happened and you hit the jackpot. It's just those. And the thing is, yeah, you can put your stop loss on, but there's certain things that your stop just gets run. And depending on what instrument you're trading, like in Forex, all your stop losses is basically a market order. Well, they could delay that fill for, a minute, and that minute could cost you 50, 60 pips or more. So you just don't want to get caught. At least I don't want to get caught in those type of trades. How often does that happen? Not that often, but it does happen. And I just much rather be in the trade for a few seconds or a few minutes, pick up some pips and be done with that trade and wait for the next opportunity. This chart right here pretty much shows you what could have happened, this past hour. You had a short trigger, you had a long trigger, and if you wanted to take that bounce, you could. But let's see, from here to here is about 7 or 8 pips, and from here to here, it's about 5 pips. Could have had 10 pips. And depending on what your daily goal is, you could be done for the day. I mean, I know Walmart has a goal of 10, but we all know how he is. He's an addict. He'll be knocking off 20, 30 or more pips a day because he just can't stop trading. Because he likes, when we're on the phone together talking, he just keeps trading. In fact, he places more trades than I do, so he's an addict. I'm trying to remember, was there something else I wanted to explain to the traders? I was wondering if there was another question out there. I don't think there was another question. But we've been talking this week where to begin. And I just once again stress that, every trade basically is a horizontal line trade because you're going to enter at a certain level. And you can just draw a horizontal line at that level. Even if you're talking a moving average crossover, it's going to cross over at a level, put that horizontal line there, and you're going to trade in the direction the trade's moving. So once that happens, I mean, what do you do next? There's three things. You manage basically the money, the upside if you're on the upside. You manage the risk, which is also money management on the downside. And you have to manage your emotions. And that's probably the most important thing to manage because you don't want to rush in. You don't want to make mistakes. And if you're honest with yourself, write down your top 3 or 5 mistakes that you make. Because we all make them. I know my biggest one is probably slight hesitation, where I'll overthink the entry rather than just looking at my screen. I mean, it's like, why do I have to think about anything here? Just enter the trade. But sometimes I'll think it, and what will happen is I'll get in maybe a pip late because by the time I hit the button and they receive it and they give me confirmation, prices moved. It did it to me today. I had a trade. I was up like almost 2 pips. I punched out, and when I got the confirmation, I was out basically at break even. It's like, how did that happen? So you just have to see what type of mistake you're making. Are you forgetting to do something? Are you doing something you shouldn't be doing? Are you doing something at the wrong time? Are you entering too quickly? Are you hesitating, entering too slowly? You got to figure that out. And once you do, that's what you can work on. Just work on that one thing, just that one thing, and see if you can just get a little bit better each day. Because I've been seeing on a few different blog posts out there from other people that have nothing to do with trading. Mainly, it's about improving your life. And they say, if just, once a week you get 1% better, that compounds. What if you get better just 1% each day? That compounds. So when it comes to trading, we used to have the 2% club. We want to go for 2% return on your money each day. So like if you had $1,000 account, you make 20 bucks, that's 2%. You can run that account up. But you have to be methodical. You have to be diligent. You can't make mistakes. So, fellow traders, fastest 15 minutes in trading is just about up. I hope you all had a profitable week. I hope the red news didn't hurt you. Hope you have a fun and safe weekend. And so, when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.